Hello traders, welcome to our channel. Get ready to learn about the best Forex strategies with this playbook with excellent win rate.
Hello guys and welcome to the Best Strategies Playbook course. My name is Amar Yasin and I will be your host for the upcoming lectures. Now, when we're talking about the capital markets, one word comes into my mind and that is opportunity. Opportunity exists everywhere in the capital markets, whether you are trading in the stock market, you're buying stocks, selling stocks, or you're trading in the ETFs, exchange trade funds, or you're trading in the Forex market where you trade the currencies, or you trade in the option markets. Opportunities exist everywhere. Now, the main goal is to find the right knowledge, the right trade setups that can use you can convert the opportunities you find into profits. And that's why I'm here. I'm here to tell you something about new tactics, new trade setups, and all of them for free. So let's get started. So before getting into all this, a little bit about myself. My company name is Investor Genie. Currently, we are making our own website, and I have been in trading for the last 7 years. I started off with the stock market trading, and the analysis I took earlier on in my career were the fundamental analysis. And after that, I moved on to trading myself, and also I learned technical analysis. I will be talking about the different kind of analysis in the upcoming lectures. But just to know, just to get familiar with my career or my experience, I started off with stock market, then I moved on to technical analysis, and in the last 3 years, I have been developing different strategies, testing them, optimizing them, and getting the best trade setups. So these are the robots. It is basically the new technology that we will be covering in our lectures. These are some of the robots that I have made. These are some of the indicators that I have made that give you good trade setups and opportunities that you can avail to get profits. So you can also find me here on mql5.com. This is my link where you can find me. You can also go on to mql5.com, search from here Amar Yasin, and this is basically my page. You can come over here. I have currently 9 products for sale, and you can also see some of my stuff, some of my blogs, some of my studies, the results, etc. So this is where you can come anytime. You can bug me, you can send a message if you have any query, and let's move on to our lectures. Welcome back to the Best Strategies Playbook course. Now let's move on to another strategy. This one is one of the best, actually one of the finest strategies that I have ever encountered and I have ever made profits on. It has almost a 90% accuracy, and there is a big logic behind that. Let me get it through. Let me tell you what it is, and you will find it very interesting. And the logic behind, you need to understand the logic behind. There's a huge logic why this strategy is so successful. So in this strategy, what we are going to do is use an indicator that is basically to find thrust bars. And what are the thrust bars? Thrust bars are basically any candles that are really huge or out of the range context. Out of the range means that it is moving with above the ATR, above the average true range indicators, right? So what that is, basically this is a thrust bars indicator. I have also this indicator in my list as well. And what you do is you put this on this indicator, and you search, you search and mode. Right now we have either ATR or in points, so we will use ATR and use 14 points. So any candle that is 2 times above the last 14 average candle sizes, this indicator will indicate to us, right? So here you can see this is a candle, green one. As you can see, this is a huge one. This is a red candle. As we can see, this is a green candle. This is a red candle. And these are 2 green candles. These are 2 green candles, and this is 1 red candle. Now, let me focus on the strategy or the logic behind this. And you need to understand this. Now, let's look at this this document. So imagine this. When the price is moving in a range like this, you know this is a range. So when a huge spikes happen, immediately the candle goes really, really high. You now know who is in control. The buyers are in control, right? The buyers are in control in all this area. So now when the price comes back, where do you think the reaction would be? Would it be here at this area? Would it be at this area? Or would it be at this area, right? So what this thrust bar or the candle does is it creates an indifference between buyers and sellers, right? The buyers here dominate so much that when the price will come back, it will come back like this, and straight up it goes down to this area where the last buyers was seen, where the last buyer and seller fight was seen. The buyer and seller's fight was usually at the range area. This was the area when the price broke out, right? So when it comes back to that area, that would be the area where you will see a response, right? A response or a buyer coming back to it. So why doesn't it move back from here? Why doesn't it move back from this area? It is because the last area where it broke out, it created a big gap at this point, right? At this point, it created a huge gap over here. So when it does come back from this area, it will go directly down to this area, this range, and then it will spike back, right? Either it will spike back like this, right, and go above, or either it can spike high and then move back down to this area, move a little bit higher and then break down, retest from this area and then go down. So these are the two possibilities when this candle emerges, right? So let's move, let's see how we can trade this. There are either two ways. So when the candle goes high like this and you are in a range at this area, you either do two things. Either you sell or either you wait to buy. Now, where do you sell? The most important thing is wait for the price to go down and move a little higher, right? Forming an M. Either the M, either this formation, or either this formation, right? You can either have a double top or you can just make a new low, new higher low. So this is a new higher low, right? Similarly, when the price go back down, you wait for a new low to form, new higher low, sorry. This is a higher low, right? This is a higher low. You wait for this to perform. Now, if the price goes above this, you do not trade, right? You do not trade. But what if the price comes back down from this area and now you trade? When it breaks this area, there's a huge possibility that it would go down to this range. There is a very, very good probability that it will go down from here to this area. Why so? Because we know there is a huge gap here. There is a huge gap, right? So either you can do this, you can sell from this area. And this strategy, by the way, is called mean reversion, because mean reversion is where you want the prices to go back, right? Where the prices go back to their original center of gravity. So this is where the center of gravity lies. This is where the most buyers and most transactions were happening. Now, this is one criteria. The second criteria is it is moving in range. It goes back up. Then it comes back down to this area. And when it comes down to this area, it spikes back up. You buy at this area. You buy at this area, put your stop loss over here. And over here, you would have sell at this area. You can either put your stop loss over here, or you could have put your stop loss over here, right? And this is also an area where there is a huge probability that it will go up. Why? Because we know there is a big gap over here. We know there is a gap over here. We know there is a gap over here. So the seller opportunity would be there as well, and the buyer opportunity would be there as well, right? Now, what if this happens? The price goes up, then it comes back, gives us very small reaction, and then falls back, comes up, and then goes down. It hits your stop loss, right? Does it? Yes, it does. Because this was a range. This is where it was supposed to be a buy. It went up, a little bit reaction, and then came back down, hit your stop loss over here, and then moved back up and then went down. Now, what can you do? You hit your first stop loss, and then when it comes back again to this area, which was initially the support, and now it is a resistance. So when it comes back to resistance, it makes another entry. You can make another entry, right? And this can go very good, very long, and your profits can be running. So this is number one situation. This is number two. And this is number three. Now you got the point? Okay, before moving on to the charts, I just wanted to show you, I have this indicator, which is alert, thrust bar, scanner, and dashboard. So basically, what it does is, it uses different, I don't have net for now. I'll use it in a while. Okay. What it does is it creates these candles, and you have a scanner over here. So for instance, you have 28 currency pairs, and you use it to find out among 4 time frames. Let us suppose M30, H1, H4, and day 1. So you have 28 currency pairs and 4 time frames. What this indicator would do, and I'll show you in a bit, what this indicator would do is it will search for those any currency pair in which time frame any of these thrust bars that are being made. So it will also indicate to you through email, through SMS, and through notification as well. 28 currency pairs you can use, and actually you can use more than that as well. But any currency pairs that you want to evaluate or you want to see, it can work. right? So you can set any one of them, and when the any thrust bar is made in any of them in any time frame, it will indicate to you, right? So let's move on to the chart. So here you see okay, let's look at this one. This one. So a red candle, green candle was made, and what happened is an M was formed, right? An M was formed. This is exactly this situation. Number one, when the candle went up and made a new higher low, it went back down from there and to the area where the range was formed, isn't it? So your range was here at this area, right? This area. The price went up from here, then it came down, and then it went a little bit up, and then it came crashing down. So what you could have done is, when it made a higher low, you waited the price to go up a little bit, and then when it came down at this point, you could have entered over here, and there was a huge gap. This was a huge gap, right? And it went coming down. This TP, this you can make as a TP, right? Then what happened? You consider this. This is another resistance, right? A red candle was formed. Then it went down from this area. Do remember this area. This was the range. This was our range. This area, right? The previous one. It went high, down from there, came back up. This is the hammer, right? This area came back up in the same region, right? When it broke down, it came back up. It came back down, right? To our next TP, isn't it? What type of situation is this? This is precisely our second part. This was the range. Although we took at this level, this is actually, let's consider this one. There was a range here, right? The candle went a little bit down. Then this thrust bar happens. This is the thrust bar, the bullish one, or you can say a bearish, in our case, the bearish one. Not the bearish one, the bullish one. And then it came back down to that area and then went up, right? Similarly, in our situation, this is the bearish one. What happened was, this was the range. This was the range, right? Then a bearish candle happened. This went up. Do not consider this one at this time, right? Do not consider this candle at this time. Do consider this candle only, this thrust bar. What happened is, it went down, broke the support, came back up, and then went down again, right? This was the position where you could have taken your trade, isn't it? This candle went back up to this area and then came back down. Where? To where? Our next support, this area. And then it came back up. So this can be righted. And this was a huge point for you because there was no major support at this point, and you could have traded that as well. right? Got my point? Now, consider this one. Where is the range? This area. It could have come anywhere in this area, right? So what is the condition? This one. A range formed. A thrust bar happened. It came back to that region and went back up. Did it? Yes, it did. Look at this. It came back down to this region and went back up. To where point? To where? The next resistance, this line. It went back to at least this point, isn't it? So this is another condition we can see. Over here, a green candle. What happened? Came back to the region. Although we can say the resistance, there was a huge support at this point. This would not have been a very good trade, but it did work. It did work. It went back up and in the same region and then came back down. 358 points. To where? Next support. Here was the support, right? This was the support. Here you can see a reaction from here and another reaction from here. It was. Okay. Another example. Okay. Here's another example. And since when it's not always the case that you trade all, it will come down to those areas. When it comes down to that area, it will flag back. But if it doesn't, you don't take a trade. So here the price went up, never came back to this area. It came back after a while, and when it did came back, listen, look at this area. Right? This area. It went back up, didn't came back down immediately, but when it did, there was a reaction. There was a reaction, right? There was a reaction at the bottom as well. This was the area. If you could have put this down, because there was a reaction at this level as well. A little bit higher than this. A reaction to this as well. Then it went back down. Right? When it came back down to the thrust bar, it came back to the same region and there was a reaction. Could you see the reaction? There is a reaction down from here, then again down from here, right? Another one. Let's zoom out of this a bit. Our range area, big range area, this candle broke through it, then came back to this area. Did it react? Yes, it did. At least to this resistance, yes, it did. And up above, you can ride your profits. Then again, a resistance. Came down, came back to this point. Almost there. But when it will come to this rectangle, this area, it will give a reaction. Let me just clear this out a bit. This area, you can see. Well, we forgot one more thing. We did forget one more thing. We can consider our first criteria as well. How? Look back again. Look closely. So this candle broke, went down, came back up, came back a little down, and then break through it. How? Went back down, came back up. This was the high, right? This was the high, but the closing was a little bit down. Didn't it make a W, an inverted M? Then it went crossing this area. As you can see, it went up high at this point, then the closing was at this point, right? So we could have waited here after the closing of this candle. If the price went down and then just broke this area, we could have stayed away from that. But it did break this. It did break this. Then retested again and then went up to our range area. So this profit can be made. We can make this profit, this area, around 400 points, 300 points at least, 400 points. This could have been a very good profit, right? How about this one? Green candle up, came down, then came a little bit higher. Yes, isn't this an M? It came back down, went higher, and then break this area. This area, right? Didn't it? A complete M. Look at this. Straight up, went down, came back up, and then break again. So entry again at this level, at this point, when the candle broke this and went to our range. Did it? Over here as well. But it's not that clear. You could have traded this one, this area. It was reluctant to go back. It came back down, then up, then down, and it needed to break that. It broke. The closing were all the closing were below that, and then it broke over here at this point, at this candle. So let me put this one. So this was the area. It came back down from here. M top was there. This area came back down. Then it went down. It did break some part, but the closing were all down. Then it broke over here. It retested over here. Then it went back to the area, the range area, right? So you can do this as well. Over here. So these candles you can also trade these candles. We are actually using ATR 2.0. When you change a bit, change this to 1.5, there would be much more candles. See, new candles have emerged. So right, we were talking about this area. As you can see, there was a range here. There was a range at this level, wasn't it? A huge reaction from this area, right? When it came back to this area, right? When it came back to this area, it flew away. Isn't it? When it came back to this area, look at this one. Came back to this area, it flew away again. So this bar we won't count because it is closing at about the peak of the range. Although there was a small retest and it went back up. This was candle also closed among the range, but a little outside of it. This was the range area. It went back in and then went back down. Didn't it? So this is how you can actually use these thrust bars to have a very, very profitable trades. Very profitable trades. I'll see you in the next lecture. Now, a lot of friends ask me, what do you more prefer in the thrust bars? Either the M formation or you wait for the price to come back to the range area. So my answer would be that I'd rather wait for the range price to come back to the range area. This model. So I'll wait for the second model because the price, when it comes back to the range area, it has a much higher probability of going up. Although in the first scenario, it does have a lot of probability that it will go down. A lot of time what happens is there are fake breakouts during this period. There are a few breakouts, fake breakouts, but the probability of going down is lower than the probability at which it will strike back up when it comes down to range. Both of these are highly probable, but I will consider this situation more. As you can see, every time it comes back to that region, it bounces back up. It came back to this region, it bounced. It came back to this region, it came back down. It came back to this region, it came back up. It came back to this region, then came back down, right? So many times when it comes back, the probability that it will bounce back is much higher. Here as well, it came back, went back up, right? It came back up. From here, it came back up to the next resistance. This is a small resistance. Although it seems very small, but it is roughly about a scalping of 200 points. So for a scalper, this is much good. And scalpers are usually looking for very good high probability trades. So this is one of the reasons why I like this thrust bar. So here is the link to my my indicator. This is basically a scanner. So if you use it, it has all the details how to use this, and I've already made a video. So all of these are thrust bars. What I've done is actually, so this is how it will look. You will put this in a VPS scan, in a VPS. So do not use this in your own MT5 platform, because every time you have a link is broken, you need to put this up again, right? So a VPS is a 24-hour service. You just can put it there, and anytime a thrust bar appears, it will immediately give you a ping on your notification or an email, or even at your cell phone as well. So here we can see a bearish thrust bars had been made in USD JPY, H1 platform, JPB JPY, Australian USD, and New Zealand USD. See, so this is how it works. It can work in different ways. So this is a thrust bar. Okay. Well, although it does not show the color, it is because I haven't put this in this scenario in this scanner, because many times when you have a big big options to search for. Usually the colors, the indicator slows it down. So I haven't put it, but the mechanism works the same way. It will work the same way. If there is a red candle, it will immediately come there and it will be notified to you. And if it is a bit bullish candle, it will be notified as well. So here you can use it, and you can actually check it through from your free demo. You can download the free demo in your MT5 platform and use the test, the strategy tester, to test if it really works. So this is a great feature in MT5 as well. So you can use that. Now, I was about to talk to you about how you can use the same feature, the same concept in Renkos as well. Renkos can help you with this. So let us just see. Let us just see this one. Okay. So this was made on 23rd of March around 2 p.m. right? So we have do we have Euro USD? Yes, we have Euro USD. So how do we use this in Renko? Let's move on to 23rd of March. So this is 23rd of March. Okay, it's 200 pips. Let's use a little lower one. Let's use 5 pips, 50 points. Okay, convert this into yellow template first. Then we will use this. Okay, no. Okay. Not this one. We were looking at Renko bars. Okay. So we will use 50 points, right? Okay. So it's updated. We will move on to 23rd of March. 23rd of March. So as you can see, this is a 5 pip box. So we have a lot of them in our chart as well. 23rd of March. So we have been on 23rd of March. Yes. So you can see this is the movement. It was around. No, this was around. This area. Yes, this area. So this is the area, right? So here you can see 2 formations, right? One, the candle moved higher. So this is the real movement, right? The thrust bar. It moved higher. It broke this resistance. Because this is a small break, we can immediately see that it broke this resistance, came down, took the support and went up, right? It went up. Then what happened? It formed an M, inverted M, right? Didn't it make an M? It went up. Then when it broke this area, it went down to this area, right? To this range, our range area. This was a small range, wasn't it? And when it came down to this area, it went back up. It went back up, then came down, and then came back up. Now look at this one scenario. Look at this. This candle started over right about. Okay, it started over here. It was a huge movement. The candle actually started over here, right? So it went back up, right? Straight up. It formed an M here, but did it break this area? No, it didn't. It actually broke this area. It actually broke this area. So it broke this area, went up, then moved down, and then moved up, and then it broke this M. And when it broke this M, it went down to our range area of and made us about 300 points, right? And what is more astonishing is that the huge difference went up till can you see the horizontal bar down? 1 hour candle was about this. 1 hour candle completed at this area, and 3 to 4 trades might have been taken place within this. So this is how Renko can help you. Let's move back to the H1 chart. This is what happened. All this happened within this one candle. This candle was roughly about 1200 points. That's a huge difference. That's a huge candle. So 1200 points different, and you can make could have made a lot of money, right? It then came back down a lot of time, right? This is how you can trade through Renkos. Renko can identify you using those brick sizes. So you got my point, right? Let's move ahead. Let's look at this one. So this candle was on 19th of March around 9 in the morning, right? We'll move that again. 19th of March around 9 in the morning. Okay. So somewhere about this. Okay. So the candle started over here at this point. Okay. This candle, right? And it went up till 10-ish, right? It ended at this point, this brick, right? It ended at this brick. So this huge difference was about 900 points. This huge was about 900 points. Now you can see, even if there was an M, inverted W, we could have traded it if it had broken this area, but it never did. Did it? It never broke this area. So we could have taken the second option, this option coming back into the range area. Isn't it? Let's move back to this H1. So this was the candle. It went back down, came back right up to this region, isn't it? And then went back straight down. A lot of profit, a good, decent profit. Can you see this? 2,200 points. 2,200 points. That's huge. That's huge. And you can identify this from the Renkos, right? This was the region. This was the region we were talking about, right? This was the region. This huge area. And now it went back up, stayed there for a while, and then went back down and straight down, right? So this is how you can use Renkos. And again, let's look at some other example. Let's look at this one. So this was on 15th of March at 11 p.m., right? 15th of March. Let's move back. Okay, maybe this, yeah. So the candle started around this area, right? And it went back up. Did it? It went back up. Did it? Yes, it went back up. Then what happened? It formed an M. 2 breaks down, went back up, and then breaks it. And I should have taken that trade. Why? Because look at this. Look at this gap. This huge gap. There was a huge gap over here. I could have sold here, short sold here, and then I would have waited that to come to this level, to this range, to this. So there is a range here. I could have waited for this to come around this area, around this range, the first range. Then there might be a second range, huge range over here, huge range over here. It could have gotten to here, or it might have gotten to here. So it took immediately. Why? Because there was a huge gap. There was a huge gap here, and then it went back here. And look at the reaction. Awesome, isn't it? And look at this reaction. Same back to the range, same back to the area of that range. Took that reaction, took the reaction, went up, straight up on those reactions. Can you see that? So two possible trades over here. An M was formed. You could have traded that, but look at here. You can't just you can't see an M. You can, but over here you can check over here, but it's not that clear. But through Rankos, it's very clear, isn't it? So this is how you can use Rankos along with this thrust bar. And you can make a lot of profit. This is a 90% strategy, 90% winning rate strategy that I'm talking about. And you can make huge difference. So let me know anything. If you have any comments, please, I will be happy to answer. And I will see you in another lecture. Welcome back to the new lecture of the Best Strategies Playbook course. In this lecture, we will be talking about a new strategy, and I use it often. I actually use it to filter out my trades, as well as taking entries and exits as well. It's a great strategy, and you need to focus on this one as well. There are no indicators required for this strategy. It is purely based on price action. So it's a very simple strategy and very, very easy to learn. So before going on to the strategy itself, you need to know basic principles and price action behind this system, right? So let's move on to paint. So this is paint. This was the initial discussion we had on the thrust bar. Let's just make a new one. So this strategy is based on trend reversals, right? So we know that if a trend is there, if the price is moving up, so there is an upper trend, see? And there will be a point when the trend will definitely change. The price will move down. So how do we know when the trend is about to change? Maybe it will go higher, maybe it will go lower. We don't know. But there are certain rules, there are certain criteria which we can use to define when the trade reversals have happened. So before that, we need to know what is a downtrend and what is an uptrend. So the basic rules of a downtrend are: the price moves like a staircase towards the downside, right? And when the price is moving like this, it constantly makes lower lows and lower highs, right? And what is a lower low and what is a lower high? It's basically when the new high is lower than the previous high, it is called a lower high. And when a new low is lower than a previous low, it's called lower low, right? So this is a lower low, this is a lower high. and we can see the price is moving down like a staircase. So whenever whenever anyone asks you whether a stock is in a downtrend or an upper trend, you can immediately tell if the price is making a lower low and lower high, it's in a downtrend. So when is the upper trend? What is an upper trend? The upper trend is similarly a staircase moving upside. And the rules are that it makes a higher low and a higher high. Right? As you can see, the new low is above the previous low, and the new high is above the previous high. So when a price is making new higher highs and new higher lows, that means it is an uptrend. And when it is making new lower highs and new lower lows, it is in a downtrend. So when exactly do we know that the price is about to change? There are certain criteria and certain rules that we can look at. So listen carefully and do recognize this. When it is making a new lower low and lower highs, there will be a point in future when it will make a new higher low, and then it will resume its upper trend. Right? You got my point? I'll explain it further. So it was making new lower lows and new lower highs. So we know it was in a downtrend. Then what happened? That it made a new higher low at this point. Right? It didn't go below this low, so it made a higher low. And when it made a higher low, it could have come over here and then went down from there. Then it wouldn't be the higher low. It would still be a downtrend, right? But it made a higher low and then it broke this high. Right? This is the reason, this is the criteria where we will know that the trend has changed. So the price breaks this high and starts to form higher low and higher highs. And here we know the price has changed, the trend has changed, right? And now it will make higher low and higher highs. This was the higher high, sorry, this was the higher low. And again, higher high and higher lows. So when it goes higher at this point, what happens? A new higher low would be made, lower high will be made, and then it will break this point and resume downtrend. It made a lower high and then it break this area, right? This point. When it went to uptrend from the downtrend, it broke this area and we officially knew now the trend has reversed. And now when the uptrend was completed and it went to the downtrend, we knew when the new lower high is have been made, this place needs to be broken. This point needs to be broken. And when it was broken, we knew that we are now in a downtrend. Try it yourself. try doing yourself. Let's do it again. Lower highs and lower lows, downtrend. Then what happened? A new higher low is made at this point, and the price, when it moves up, it broke this point. And when it broke this point and the candle closed above it, we knew that the trend has changed, right? And when it was in an uptrend and a new lower high is made at this point, a new lower high is made at this point, it needs to break this area. And when it does break this area, we know the trend is reversed. So this is a basic criteria, basic method of knowing when the trend has reversed. So how do we trade it? How do you make sure to get real good profits from this? And what are the criteria? What is the reason that this strategy is very effective and very high probability of winning? We will continue this in other lecture. So I'll see you in the lecture. Okay, guys, welcome back. Now let's look back again to this strategy, because looking back to this strategy, you need to learn a little bit about this again and again so that you can practice. Now our strategy also depends on the same model. We will go one more time and we will also define our stop losses and our take profits as well. So here it is, downtrend, lower lows and lower highs. We know it's a downtrend. Now the price changes. It makes a higher low at this point, right? And then it breaks the high and moves upwards, right? So this is the area we know the price changes, the trend changes. And this is the area where our entry would be, right? So this is our entry. We enter over here and we put stop loss at this level. You can also put the stop loss over here, but there's no need for that because we now know that the trend has changed. So there is more likely that it will go up. So we can put our SL over at this point. Our entry was here. And now our TP depends on us. So either we can put our first TP at the next resistance, right? And when the TP is hit, we move our stop loss to the break-even point. We have an option. We can put our stop loss to break-even and let our profits run. Or we can just put the SL at the past price where it was, and our TP would be here. Then our second TP would be at the second resistance, and our third TP would be at the third resistance. So this is one criteria, right? Our second criteria would be to use Fibonacci. We will be using Fibonacci levels in our charts, and I will show you how you can put your TP there using the Fibonacci levels, and you will be amazed to see how accurate those results work. Okay, when the uptrend is over and we know a new lower high is made, it breaks through this point and start moving down, we know the downtrend has started. Our entry would be the break of this point, right? This would be our entry. And our stop loss would be at this level, right? Our next TP would be, our first TP would be at the next support. TP1 would be at the next support, TP2 would be at the next support after this one, and our third TP would be after this. Or we can use the Fibonacci levels. So you get the point. You can also move your stop loss to break even after first TP is hit. Now let's move on to our charts for this. Okay, let's use some regular charts. Okay, for this purpose, we also need to know a few criterias. Usually this happens when there is a major uptrend. First there is a major uptrend and then there is a low trend, right? Then a new trend starts. So here it is. As you can see, the prices are moving up, up, up. The prices are being very high all this time, and then a change occurs. How did the change occur? Well, you can see this. It went down from here, right? Down from here till this point, and then it moved up, back up, right? So new higher low is made. So when this point breaks up, why didn't I take this one? I didn't take this one. I took this one. Also remember one more point. So it qualifies as a higher low, lower high, when two consecutive candles, big candles, are made on the way up. At least two big candles, right? Similarly, for the downtrend as well, for the uptrend as well, you need two consecutive candles, two big consecutive candles. But it didn't come here, it came here. A lot of either a lot of small candles or two big candles at least. So at this point, at this very point, we knew this point, and this was the new higher low, this area, and this was the point we need to break. So when it broke, right, we could have entered over here, and we could have probably put our stop loss at this point, right? And we could have driven our profits down there. Okay, let's see how our take profits would have worked out. So we can see it broke down and all the way it went riding down. So our first TP would be around this area. We could set it at why is it not working? Okay, let's use this one. So this area, right? It broke through this area. Our stop loss were at this area. So this would be around 900 points. Not bad. Our second TP would be around, either you can make it at this point, so this is another range area, or you can either put it at this point. At this point, it depends on you, right? Second TP would be around a little higher, ideally. I mean, so this would be your second TP, and your third TP could be around somewhere around here, right? Somewhere around here. There are a lot of lines we cannot concentrate on which ones to see. Let's make a new one. Let's look at a new one. Oops. Chart window. Move on to yellow template, and then we were here around March, this area. Okay. Now there can be second criteria as well. We can use Fibonacci for our taking profit. For Fibonacci, the ideal place is to use like this. When there is a new lower, when a new low is made, you have to put your cursor at this point. Just click and move it towards your new high, which is lower high, right? And you can extend it to the right, and leave it. Now you can see you have to click over here, drag it up till this point, and just leave it. Now you can have your TPs, right? So your stop loss is above this point. Your first profit could be at 161.8%. The second profit could be at 261.8%, and the third could be around 423.6%. Right? So this is how you can take your profits from here in H1 candle, right? Now let's move on to first a downtrend, a pure downtrend. We have seen this downtrend, a little bit range, but we need to know a solid entrance, right? Solid entrance. So two bigger candles, we need two bigger candles. There we have two bigger candles, right? Two bigger candles. This was one candle. Two bigger candles. Although there was a huge range, big range, we need to break this one. Bigger candle, you can see. So this is the new high, and this is the area you need to break. This is the area you need to break. Where could be our stop loss? Below here, right? Below this point. And where could our TP be? Take profit. Let's do this again. Okay. Okay. I need to put this to my right side. Why isn't this working properly? One more time. So almost at this point, right? Right? So we can see the entrance can be at this point because it broke from here. A stop loss could be at this point. Our first TP would be at here at this point. When the first TP can be hit, you can move your stop loss to your break even. But there is a cost for that. When it moves down, back down there, it can hit your break even, and you can get you won't get enough profit. But if you keep the stop loss at the down level, look what happens. It goes up, hits your second TP and third TP as well. So it's a very effective strategy, right? Let's look at another example. Any example we can see. Okay, let's look at CAD JPY. Yellow template. Okay, here you can see. Okay. Let's see a little controversial one, right? Okay. So it's a range. It's not that very effective. But when you look at in Renko, this becomes very easy. Okay. Can you see? A new higher low is made. It's easy to read. This is a small uptrend, and this is a small downtrend, right? This area needs to be broken. So we will use this Fibonacci. Sorry, let's just put this at this area. This is the area needs to be broken. But just let's consider this one, right? If we consider this one, then our stop loss would be hit. Yes, that's not the criteria. So let's consider this one, right? And this is our stop loss. It's a huge stop loss. Okay, and we will try to check if our TPs can be hit. Okay. So our TP would be hit at this point, but it would not come to the second TP. It can either go back to our break even or it can go back to our stop loss, right? So this is one criteria. Although we can see these candles and these strategies are not that effective. Renko charting is very effective. It's very easy to use. Here you can see a huge uptrend. After a huge uptrend, the more chances are going down, it becomes very effective. So this might be an area. This might be an area because two bigger candles upside, and there are two candles over here as well. So we can use this one as well. So this area can also be used, right? Our stop loss could be at this level. So our Fibonacci becomes at this level, right? First TP, second TP, and third TP as well. Yes. So all the way down, up, down. Then it didn't break this. So we are still in the downtrend, right? Still in the downtrend, downtrend. Then there is a range. So when the range comes, this becomes a little ambiguous. Now let's move to another trendy pair. So JPB. Let's look at pound yen. It's one of the most trendiest pairs out there. Okay. Okay, I don't have it right on the internet right now. Let's look at pound USD. Okay. So downtrend, a new low, actually it's a double bottom, and then a new higher low and a break of this point, right? Why isn't this working? Okay. Now here you see. At least your first TP can be hit. Then you can move your break even, stop loss to break even. I usually do that. I am a more of a minimizing loss person and then the maximizing profit one. I need to make sure I don't lose money. So this can be another strategy. Great upper trend. Then you can also use this area, although very high difference there. Maybe a TP here, maybe or maybe not. It did hit the TP. It did hit. The stop loss level was very high. So you can use this in any way possible, right? Now in the next lecture, I will be using Renko charts, and precisely why I prefer Renkos for this strategy, you will get to know in the next lecture. So see you in the next lecture. Okay, let's look at another example. Here we have USD JPY, and we are looking at H1 time frame. So here we can see this is all the way a downtrend, and then from here, this was the recent low. It went into a small range, and then it made a new higher low, and then it break it. It break this area. So this is the area which we would have been looking at to break, right? This was a huge range as well. So, and this was the low, right? This is the low. You can use a Fibonacci from this area to check your profit levels, right? So you can easily see you can attain all of these profit levels. The stop loss could be just below that. There was a chance of hitting it, but you can see this was a huge range as well. You can either put your stop loss down below that, but that would made the entire stop loss very high. So you can put it just one ATR below, one ATR range, one average 2 range, or just a few pips below this. So you can see it went high, it touched your first TP over here, it touched your second TP at this area, and the third TP at that area at 423.6, right? So again, it went high. You can also do one more thing. You can either trade small areas as well. As you can see, this was another range. You can either do this part, but as you can see, this could have easily touched your stop loss. But what you could have done what I would have done that is, it's because there was a huge range over here. As you can see, this is a ton of range. The price moved within this range for quite a bit. I would have taken its profit over here at this range, but it was very near to very near to this low. So I think I wouldn't have taken that bet, right? So sometimes you have to see if there is a big gap at the just before that, before your entry, then it's a good chance to have a good profit. So here you can see it went up, it came to a zone over here. As you can see, this went down, it made a low, but it went back up, never broke it, right? It never broke it, went back down, then again up, formed a small range, a small channel. As you can see, a small channel all the way up, and then when it did break, as you can see, it did break this area. So this was the area, this was a stop loss, right? So you can put the Fibonacci at this range all the way up till that area, right? And you can see it went down from there at this level, and this level, right? So you get my point. Even if this, as you can see, this area, two large candles, one this one, you can even trade this one as well, very small. So this was the area you want to break. This is our stop loss, right? And you can see it clearly touches 168.1.8. look how exactly and accurate it targets the this area. It's because many people use Fibonacci's and use these levels. These levels are very prominent and very effective as well. So many people do use them. And when the first TP, this you can see as the first TP is hit, what I usually do is I move my stop loss up towards my break even. So even if hit my my TP1, it still doesn't give me a loss, right? It depends on you. If you want to maximize your profit, then it's up to you. You can either take 50% profit at this point, 50% at 261, 50% of the remaining at this point. That would be your 25% of the remaining one, and then the last 25% at this point, right? It depends on you. So if you want to take good profits, if you want to be taking your profits early on, then this is the key. So let's move on to GPB, JPY. So this is another area. Okay, let's add one more thing. How do you consider if that low is the low you're looking for? Many people might be getting some type of questions like that. So one criteria is to look for two big candles, and the other criteria is to use a Fibonacci from the last low and check, move towards this and check if the price have come down up till 33% to almost 61 or 67%, right? If it has come down to around at least 33% to 67%, which is this range, this area, you can say almost about this area, right? And 67 would be around this area. So you can see if the price went high and came back within this range, right? So we know now the low has been made, right? So how will we trade it? Like last time, this is our entry. The area that we need to break is this one. This would be our stop loss. Just below that. It's a strong range. There is a strong range. It can come down to this area as well. So if it comes down to this area, you can either take your stop loss over here, because this is a very strong range to break, right? So you can use this Fibonacci and target this, right? The first TP hits at this point. It came back down, didn't come to this our stop loss, but it went back high as well. So it almost touched. I think it touched 261.8. Yes, it did. Almost did. Right? This is how you can trade. Let's move a little back. There's a strong downtrend. So here you can see an upper trend. This went down, came back up, never broke this, made a new higher high. So our this point was invalid now. This point was invalid. Now you're looking at this level, came back down, didn't make two candles, and even break that high. So this point is also irrelevant, because there weren't any two candles. This was two candles, but this was not the low we were looking for. Okay, it went back to this area, went back high, right? Now you can consider it, because this is the this is the new high, and this is the new low, right? It went back up, two big candles, 1, 2, or we can just look at if it was in 33 to 67% range. Let's look back. Did it? Yes, it came back into the 33 to 67 range. We can qualify this as a new high, new lower high, right? And now we can trade this level. This is our TP1, our TP2, and our TP3. All of them hit. Right? So this is how you can trade. And we will, in the next video, we will be looking at using the same technique with Renko, and then you will realize how efficient Renkos can work with this strategy. I'll see you in another lecture. Okay guys, let's look at the same strategy with Renkos. So this is Euro USD, and we are using 5 pips or 50 points size for this for our charts. And here you can see now on a 5 pips bricks, this is an uptrend, right? As you can see. So where we can, and here you can see this is the top, and it made a new low over here and a higher low at this point, because there are at least 2 bricks. There are 3 of them here, and we can use this in our trading as well. So this would be our around this area would be our stop loss, and this is the area we need to break, right? So what we do is we use this. Oops. Firstly, we need to see if if the reaction is within 33% to 67%. It is, because it's even above 61.8. So yes, it did come back, as you can see, and our take profits would be around 161.8, and this is 261.8, and the third TP is also hit, right? Let's move on to another example. So you can also trade this. As you can see, 2 bricks down, this was the low, and this was the higher a new higher low. So you can trade this area, small area as well. So this is a small play, and look how exactly it touched 261.8 area. Little bit to this. Yes. Okay. Exactly around 261.8 area. So 2 TPs were hit, and you could have taken your stop loss above to this level. Then again, it's going down, down, down. You can also trade this one. As you can see, again, a higher top, waiting for the 2 candles to come down and then go up. 2 TPs can be hit. Then we can, okay, so there might be no more trades here. Okay, let's move back a bit. So here's a very good range. As you can see, a higher low, at least 2 to 3 candles down. Using Renko makes it much easier, isn't it? So our first TP, second TP, and third TP, right? All the way up. So it's an upper trend, and there's a lower trend as well. So there are two of them, 2 candles, but it did break, then came back right up. So, and made a double top. So here you can again take your positions at this point, isn't it? Right? 161.8, 261.8, and 423.6. So this is how you can play with Renkos. And let's move back, move back, move back. 2 candles below, you can trade this. Very small, for a very small range. Right? all of them hit. Okay. But you need to make sure that if the price is not within a range before that, either it has gone severely down, move right down, have a big downtrend, and then you can trade, because it gets a little bit better in probability, right? So all of this in range. Here is a small uptrend, and you can trade this one as well, right? This is an uptrend, right? This is a huge uptrend. You can see at least 3 phases, 1, 2, and 3. So you can trade this one as well. This is the low, this is the high, and all 3 being hit. Isn't it? Right. So this is how you can play with the Rankos as well. So upper trend, you can see, you can easily recognize that you can trade this one as well. It's a double top, but a good way to trade as well. All 3 TP set. Another uptrend. So 2 candles down, but this is the low. This is the extreme low. You would not trade this, but this is a higher low. So you can trade this one. This is the place to break. This is going down. So 168 point, all 3 TPs hit again. See? Okay. A little bit range behind this. So, and again a downtrend. We need an upper. We need a good solid downtrend. Because, okay, so this is one small range, then downtrend, and then again uptrend. So 2 candles down, we can trade this. Right? So you can use all these techniques. So you can either use 5 pip price, then you can use 10 pips or 20 pips. It depends on you. And if you don't want to use the Rankos just make it easier, and it makes you implement those ideas very easily. So if you don't want to use Rankos, you can either use it on regular charts as well. So if you need to download this Ranko, you can find this on my link that I have provided, or in my indicators section as well. So so this is my link. Again, this is the my link to all the products which I will be showing you in. I will be sending you in the link section as well. So this is Ranko charting for MT5. You can use this link as well. And I'll see you in another lecture. Thank you so much. Hello guys, let's move on to some of the examples now. And this is where the magic actually happens. So we will see how efficient the Rankos play in our evaluations and with indicators as well. So here's our Euro USD chart with the 20 pips brick size or the 200 pips brick size, and immediately we can see this is a downtrend, lower lows and lower highs, and this area is the upper trend. So let's just find out some of the how you can use them with support and resistances. So this is the area you can see, or rather you can say from this, we can start from here. The price moved down with a little bit hiccups. It moved up a bit, but it moved down a little bit resistance. Then it moved at this point, whatever the reason behind was that we will see afterwards, but it moved immediately right up. So this was a huge area where an abrupt price change was seen. So this is the major area where you can see, or you can say in future the price will hit and move, do some kind of reaction. So this is area we would have marked as well. And right, you can see when the price hit down, it started a range over here. So here you can see for a couple of time period, it moved within 400 price or 40 pips range area, right? And when it braked out from this area, either it would have broken down, breakdown, or on the upside. So when it broke upside, it moved back in the range, and you can see this was the range area. The upside, you can say, at this area, and this was the lower end. So this whole area was a support area when it broke up. So we can see when it hit back, and this was the first reaction. This was the first retest after the breakout, and immediately you can see it moved quite high, and it moved around from the from the upper area till the high around 1366 or 1350 points. So this is the this is how you can check where the resistance or the support area can work. And then again, you can see it came back down here again in this range, and again gave a reaction, and this time a smaller reaction. And we can see that in the first reaction the price moved a bit more higher, but in the second reaction it moved a little bit lower. So we can see the momentum is being shifted. The momentum is losing its power. It's losing its trend. So we can say in the third reaction or the fourth reaction, it is likely to break down. So here is what exactly happened. It went down, broke down, and moved back up almost to the same region, almost to the same area. And we can just loosen this up a bit. So almost to the same region, and immediately pulled back down. So this support that was initially the support broke out and then became a resistance. See, it went back up, nearly touched it, and then went down. It didn't came back up to this area. But when it does come to this area, watch what happens. This area, we have already marked this area. It went up and a reaction was taken. So you could have short sold over here and make good profit, right? Then it moved back up a little bit, SL hunting. It moves back right through it. Then again, it went quite down as well, right? So this is how you can use support and resistance. So another example, let's move on to another example, right? So this is an area, this area, you can see the price moved down, then it moved up, and then an abrupt 3 to 4 candles down, 3 to 4 breaks. This is a major reaction area. So you can say when the price will come back to this area, and you can also make a range over here. Yes, you can see this is the range. You can also include these areas because this was also a reactionary area, and then a little bit or more reaction. And you can see the first reaction had 3 or more bricks, 3 bricks higher, and the second reaction had only 1.5 brick higher. So the momentum was losing. We can see the first reaction was good, but the second reaction momentum was losing, and on the third reaction or the fourth reaction it might have broken. So this support area, this area, you can see now becomes resistance, right? So it came back in and then it moved down, right? Now when it came back to this area, this range area, you can see there was a slight reaction. There was a reaction, right? You can see there was a reaction. This brick moved up, and we can see this was a reaction. A very small reaction though, but it still moved around 300 points down, right? But the momentum, initial momentum was very tough, as you can see. the momentum was tough. It moved higher. So this resistance area broke up and now became a support. And when it moved down, here you can see there was a huge movement, right? This was a huge movement. And this was the area. The first reaction is always the best reaction. Always the profit area where you can make good amount of profit. This is the range. This is the moment that you make profit, right? Then it came back again, had a little bit of stop loss hunting, but the major players, the market movers, and again up. Then it became, you can see the reaction. The first reaction was big enough that it moved really, really high. Then a bit of hiccups. Then moved in the same range, moved a bit higher, but not that much. So the reaction was less. It came down, back down, and you can see again, it came back down to this area, right? And moved back again to this area. Again, this range, right? This, you can see this wick, and then it moved back down. So you can make another short sell call here as well, right? Another example. Okay, let's see this one. Let's see this one. So this is the area. You can see the reaction over here, the top side, and let's move on to the bottom side. Okay. Now, initially, this was the area where might we have seen that this area, this was the range, this was the initial candles that we should be looking at. The reaction was good enough. Then it moved back here again, a little reaction again, because the sellers or the buyers, the big players were seeing that initially there was a big reaction at this point. This is where you can have taken a mild scalping position, and it moved back up around maybe 500 points. Yes, around 600 points. So 600 points, almost a confirmed profit. And then it moved back down. It broke that support, moved down, and then came back in the same area, as you can see, this same area, and then moved back down on the first reaction, right? The first reaction, it was tough. Then it moved back up in the same area, and then it came back down. See, you can you could have made profit from here, or you can have made profit from here as well. So it moved back down, right? Then again it moved back up, a little reaction, then moved back up again, and this is the fourth reaction, a little bit more reaction, but then there might be a news or something, we can't say, but Rankos do not cover news. So this is where again it moved back up, broke it, then it moved back down. You can see a little bit reaction again, right? So it has been taken 4 times. This was the first reaction, the second reaction, the third reaction, fourth reaction, and then it broke up, right? Then it had a little bit response again at the support. Then it came back down. It came back down and broke it through. Why? Because new range was developed over here, right? New range was developed. So we need to make shifts of these ranges, and we can see this was a huge range. Range over here, we can start from here, and we can move this one over here as well. So this was a huge area. It could have taken support from any of this area, and look at this move now. It went back down to this area and all the way up, all the way to this week. See, that is how you play with Rankos and the support and resistance. And we can have another look. Let's make the video a little bit shorter. Already 10 minutes have gone by. Let's look at another example. Okay guys, welcome back. Before going on to the other examples, let me first introduce you one of my indicators that you can get from mql5.com. This is basically a support and resistance. and you can just take that and drop it over here. And if you want to see the trend line and horizontal lines, both of them, then you can use set both of them to true, and you can put the end period at 20. So it would look something like this. So you see, this indicator helps you determine some horizontal support and resistance and trend lines as well. So it can help you identify this in any format. So the latest ones, and you can apply this either in Renko, or you can apply this in other indicators as well, other candles as well. So you can see this. If you put this at 9, which is at the default one, you can have a look. See, and if you want to set the trend lines at false, it will only give you the horizontal lines. So here you are, right? And if you can change them, the higher you get, the higher value, the more important the horizontal lines would be. So if you keep on at 30, end period at 30, you can see some of these trend lines, and are very the horizontal lines are very accurate ones. So you can see this one, a lot of resistance here, and the candles were unable to break that, so it counted as resistance. This line acted as a horizontal line, horizontal support. This line also acted as a horizontal support. So you can use this indicator, and you can get this from my profile. I have some my published products over here, and this is the product, support and resistance with trend lines. You can buy this and use it on your own, right? So let's move on to the examples. So here we were. Let's remove this indicator for now. Okay, so moving back and looking at let's look at okay, let's look at, for example, this one. Okay, so this is the area where it bounced really hard back. Now you can immediately see the reaction was quite good, but when it came back to this area, it went back again, right? So this area, even at the bottom of the support, when it came back, a reaction was seen, like, right? And then came back, retest again on the second attempt, and then went back really high, right? Then over here again, it moved up on a reaction, then came back, gave again a small reaction, and then it broke down, came back retesting. Here is a retest. If you can see this wick, it came back to the zone. So let's make a zone over here. So you can see, you can count this as a whole zone. So because this is the area and another area where it reacted back. So this area can be called as a support or resistance. So this was a support, then it broke down and it became a resistance and went back down, and then it came back up, right? So here you can see it formed a little range. So if we move that up over here, and also this area, so this whole area can be counted as a region where it can bounce back, and here it did. It went down, broke down, came back a little high. Okay, this is the area. It came back, touched it, went down, right? And came back again to this area and went back and down again. Then you can see it came back right after a while and came back. Then it reacted. Then it came back and then reacted as well. So here you can take an entry over here and move your when it moved down. You could have put your take profit at any point. You can have put the take profit at this level if you wanted to, because that is the nearest support. So you could have opened a short sell position over here, but you could have taken your first take profit over here, or if you could allow it to go a little bit down, you could have taken take profit over here as well. So this is how you can play, right? Okay, let's look at let's look at another example. So here's another example. Okay, so this is an area where we can see a range was formed and another range was formed over here. When the price broke down, it went up to this area, this area. This area became as a resistance and it immediately came down, right? Then it went up, tried to make a reaction. It did make a reaction. And now if you also have to keep in mind, we are looking at only 5 pips box size, 50 pips, and this is not 200 pips, 200 points or 20 pips. This is a small box size. So here we can see another reaction. It came back down, but it didn't move a little further because this area acted as a support, right? When it break out from this area, it went up, touched a resistance area, our resistance area. This area was our resistance area. It came back, touched the support, and then went up, right? It went up and then it came into another resistance area. This was a bigger resistance area. As you can see, a lot of breaks over here, and then it came back really down. See, and then again acted as support. This area acted as support, went up again to this area, our resistance area, and then fell back down, right? Okay. Let's look at another example. So this area, right? Let me just put this away. Put these away. Okay. Let's put it there. Consider this area. So this is another range area. You can put this the lower level at these level and the higher level almost at this level, right? Almost at this level. Now, when the price broke out from this, you can immediately see it reacted from this area, right? It reacted and went up. You could have taken a buy position over here. So it went back up, came back down. On a very small area, it went back up, then it came down. A small reaction, and as you can see, this wick is a small reaction again at this level. Then it went down, and almost at the lower level, it took a little bit reaction within that range and went down again, right? So this area was the support area, was the range area. It went back up, a small reaction within the area, and then went up again. Then it came back down again on this same region and then reacted very well and went up. Then after a while, it came back again in the same region and reacted, right? And then it came back down and again reacted from this area. So this range became a very important area for the price movement of CAD JPY. So this is how you can check where you can place your trades, or where you can have a look which regions are important and which regions are not. Since this was an area of only 5 pips, this is you can see a lot of bricks. When it is in 10 pips or 100 points, it is much more easy to see and clear to see, right? So let's have another example. Let's look at USD CAD. We have let's move on to one. I don't know why it isn't working. It is working. Okay, let's use 100 points. Okay. Right. So this is one brick is of 10 pips or 100 points, and you can see a rated reaction from here, right? This area, we can count this area. Okay. The upper range is this area, and the lower range you can count as this area as well, right? Anywhere from this area. So you can see this area had been a little bit in a range area. It reacted to this area, went up and broke it out, and then when it came back to this area, it went up high, reacting on the top of the support area. This whole area is the support area. This is the lower part and this is the upper part. It reacted on the upper part, went up, and then when it came down, it reacted again on the lower area and went up again, right? Then again, you can see. Okay, let's move a little bit earlier. So this is another reaction. This area, you can see a great reaction over there, then a little bit more reaction, then it went up, and when it came down on this area, yes, we also talked about this area as well, it came back, it reacted again. Look at this, 3.5 bricks. That means roughly how much? Almost 500 points, 50 pips. So that's good. That's good. That's still good. Okay, let's move it to another example, and then we will be done with the video. Okay, there is another example, small example. A price was being rejected at this point, almost at this area, right? This area, then it went back up and then reacted, then it came back, then reacted, and then it hesitated over here, and then when it came back again to this area, another reaction, right? The first reaction is always the good one. The first reaction was really good at this level. You can see this, right? Almost 500 points. Then it went back down, came back to this area, and then again it went down, right? Another 1600 points. So that is how you play with the Rankos. These areas are always the change areas. The way the price reacts is always a very good area that you can play. Here you can see it played while it reacted, then it went down and then reacted as well, and then when it came back to that area, almost that area, and then it went down. See, this is how you can play. A range is being formed, and then it went almost at the top of the range, and then went up high, and then it when it came back to this area, it came back down really hard. So this is how you play. So let's move on to another indicators that you can use with Ranko. So I'll see you in the next video.